So coming up to Christmas break and looking forward to 2018 and thinking about this time last year, you ask, am I happy with how we've done over the last 12 months? Unequivocally, yes. We came into 2017 with an awful lot of risks on the table, particularly on the political front. There were great concerns about the rise of populism. In June 2016, our government had fallen because it had lost a referendum. Donald Trump was elected in the US. There was a rise of right-wing populist parties throughout Europe. And yet here we are, coming up to Christmas 2017. We've had a good year on returns. There's not been a major problem with the economies. And if anything, they're getting stronger. So I would have been over the moon with this situation 12 months ago. So looking into 2018, I think one of the big changes is that economic growth is beginning to pick up, at least outside of the UK, in the type of way you would expect it to pick up after a major recession. Now, after the recession of 2008, 2009, the economies of the world tended to bottom out, but there was no super recovery. China kept going because it was spending lots on its economy with regard to investment, but in Europe and the UK and the US, it was an anemic recovery. It wasn't the type of recovery you expect when you've had a nasty recession. And it's been like that really for the thick end of the 10 years that have gone past since the 2007-2008 global financial crisis. Now, when you get a global financial crisis, as you had back in 1929, it tends to have a knock-on effect because there's no confidence in the banks and the financial institutions to provide the capital needed to fund the recovery. But as the financial system has gradually repaired, confidence is returning. And looking into next year, it looks like we can expect some decent economic growth around the world. I think for next year, we will remain positive equities. We're probably a bit more positive equities going into 2018 than we were going into 2017. If there is a criticism of what we've done for the last year, it's that perhaps we were a bit too cautious. So I think equities will run, but they've been doing very well recently. Your markets hitting record highs unnerves investors. And yet still, if you sell equities and try and go somewhere else, where do you go? You can use a nice basket, broad spread basket of equities, either around the world or in the UK, and pick up a dividend yield of over 3%. You're only going to get 0.5% on your bank or building society deposit. So relatively, equities are more attractive. And I think that will continue into 2018. So you've asked, where are we positioned? And what is going to change specifically with the portfolios? We will not be going into long-dated bonds. That's absolutely clear. If the economies of the world continue to pick up, the US is growing at over 3%, Europe is growing at well over 2%, Germany is on the up, consumer spending is going up in Germany. That's beginning to act as a powerhouse for Europe. China's growing around 6%, so it's no longer growing at this heady 10%. It's got down to a level that's probably sustainable. So there are big drivers of the economies around the world at the moment. But as unemployment has been very low in the US and in the UK and in Germany, the absence of a wealth of cheap labour to fund increasing turnover has gone, which means businesses will have to now start investing in capital items because they won't be able to get the increased production from labour, and that's positive. So I think what everybody has to be very careful about into 2018 is holding long-dated bonds. Because if there's a shift upwards in interest rates, as central banks move to normalise monetary policy, as there's good growth coming through, bondholders could get whacked. And that's a situation we will want to avoid for next year. So I'd just like to wrap up by saying, yeah, we're reasonably optimistic for next year on asset prices. We think things could be quite good, but there's a saying that always rings in my ears. It's trust in God and keep your gunpowder dry. So trust in God, we're looking at the economies of the world doing okay. Keeping your gunpowder dry means we're not going to try and shoot the lights out. And we've tended on the portfolios that are not running full equity risk, we keep some form of protection in place with regard put options. So that, I think, is what we'll continue to do for next year. Yeah, finally, of course, what I'd like to say is that the whole team at Courtiers, the investment side, back office, front office, advisor, we never forget that we have a responsibility to clients to make the things happen that they want to. And that's why they entrust us with their money. Whether it's a board of trustees or family wealth, it's very important. And we are always grateful and flattered that that trust is shown in us. So for all our clients, thank you for trusting us in 2017. We do our very best not to let you down in 2018. In the meantime, happy Christmas to everybody and very best wishes for every success and a prosperous and peaceful 2018.